mode.
Good day everyone, and welcome to Admiral Markets Premium Webinar. Today is 29th of March. My name is Nenad, and as you already know, we had a GMT shift yesterday. So basically now it's 4 p.m. GMT, and actually it's not 5 p.m. GMT. And I think that a lot of people might be confused for this GMT shift, but just for your information, as always, webinars will start at standard time. So tomorrow webinar, which will be Monday recap, it will also start at a normal time, which we had before a GMT shift. So it will be actually 4 p.m. GMT. I hope that the information on the website concerning registration will be changed, but in the case it isn't changed, it will be 4 GMT. So the standard time for webinars should apply. So there was no change. There was no actual change. There was only GMT shift. So sorry for this confusion. We waited some 30 minutes. After a time that was a compromise we need to make for our traders who will probably join in some 15 minutes later, but I will be slow with my presentation so they can also get a grasp of this webinar. And actually I will be talking about practical naked trading methods which I have used prior to inventing Camarilla MACD. And some of those principles, especially scalping, momentum trading, I still use, so it will be very, very good for you to grab this knowledge and try these methods, okay? Before we begin our standard risk disclaimer, online educational materials are developed by Admiral Markets as Estonia for a global audience. Therefore, please take into consideration the information in this session may not be suitable for everyone. To get a corresponding information on charting conditions and any other detail, please visit www.admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Risk disclosure statement stating all possible risks associated with Forex market. By accepting the risk, you're also proceeding further with me. Admiral Markets UK Ltd takes no responsibility for information accuracy. The analysis represents the personal opinion of the author, it's me, and in no way it represents the actual suggestion for a trade. These are not MUK's opinions, and the website individual is not a .co.uk website, but the globalnews.com website. Forex is risky business, and this should not be taken as advice. It's a personal opinion only, and this webinar is for informational and educational purposes only. Okay? With having said that, we are ready to begin. As you know, bonus campaign. I just need to mention you that a bonus campaign has already started. You can get up to 50% bonus on deposit, 0.25 lots per each euro bonus, and if you have 180 days to complete, you can get the bonus by registering and making a deposit by this link. Okay? We are going to talk about what is PNT, Candlestick, high momentum trading, Candlestick scalping, and pro tips. So these are important topics which we will cover today, especially Candlestick scalping and high momentum trading, because you can use that every single time, no matter which system you use. I hope that you will like this method, because it's actually, as I said, this method I used before I invented Camarilla MACD, and some of the principles from the method are also integrated into Camarilla MACD. So I think that this will be pretty much straightforward, and as you always know, I love to keep things as simple as possible, so the method will be definitely and will be useful for everyone who trade and who love to trade price action, but also for traders who not trade just price action, but also their own systems. Practical naked trading PNT stands for practical naked trading, and that is actually the method as I used before Camarilla MACD. That is the method which has a lot of trading components in itself, and those components are basically used for both analysis and trading. The thing is, the method can definitely help you in trading decisions, and it's a definite price action method. So as I say, it's maybe it's a little bit different from other methods you have encountered so far, but actually if you see how it behaves on real-time charts, you will see how good the method is and how concepts which I have integrated into Camarilla MACD, they also work with PNT. That is basically a concept of using important pivots and technical patterns. So by using practical naked trading, you will get a grasp of price action. You will learn how to trade price action on 1 hour chart. You will see, and you will love this because it's actually easy and straightforward. As you know, my principle is always KISS, and KISS is keep it simple. Some say that is keep it simple stupid. Some say keep it simple sir. I call it KISS. So actually it's a straightforward price action method. It will strongly rely on market momentum, and especially high momentum trading. So it will rely on high momentum trading and scalping, which you will try to use by practical naked trading, is scalping which actually uses only candlesticks. So there are no indicators for these two methods. The only indicators is price and price itself. Okay. High momentum trading, what does it represent? Basically, high momentum trading represents the amount of uncertainty or risk involved with the size of changes in a currency exchange rate. In order to define high momentum, we need to know basic candlestick patterns, and we need to know that momentum is always beneficial to our trading if we get a proper entry. Because after the entry, if we see a good momentum, price will usually go in our favor. Okay. Momentum also depicts a fast change of price during a short time period. So momentum can exist on each single time frame, not just on 1 hour chart or 30 minutes, 15 minutes. Momentum can exist on 1 minute chart. And the momentum is stronger because it's usually magnified by the use of leverage, which retail traders mostly do in their everyday trading. Okay. Currency trading also brings a high degree of volatility, and volatility can be both dangerous, but it can be also beneficial to our trading decisions. High volatility means that price will definitely move, and by using some of the principles we have been learning so far, and we have known that they work, basically we are aligning momentum and volatility with the price. Okay. Most tradable pairs use a high degree of volatility. Those pairs which have a very high degree of volatility are, of course, euro dollar, pound dollar, Australian dollar during Tokyo session, but also do not underestimate the power of minor crosses. Believe me, guys, if you open a chart of GBP New Zealand, you will see how strong the pair is. GBP New Zealand, Euro Australian dollar, Euro New Zealand dollar, GBP Australian dollar. Those are minor crosses which have a high degree of volatility. And usually if you make a good position with those currency pairs, and I mean a precise entry with those currency pairs, you will see that there is a much bigger movement in GBP New Zealand and GBP yen than in GBP dollar, and especially GBP New Zealand. just pay attention to that pair and pay attention to GBP Aussie. It's a very, for me, it's very, very known that from time to time, I put the GBP New Zealand analysis on the Admiral Markets website, and you can see that if you traded GBP New Zealand lately, it could have given us a huge amount of profits. So actually, those pairs are in correlation with other GBP crosses, but in order to see the correlation between GBP dollar, GBP yen, GBP New Zealand, and other GBP crosses, please check correlation tables. But one thing is for sure, minor crosses usually give us a high degree of volatility. And that volatility is beneficial to us if we know how to basically make a good entry, okay? So it is really very, very beneficial. Volatility also provides trend momentum, and trend momentum is pretty much magnified by increase in volatility. You probably noticed that London Open has had a good amount of volatility. Then we have a London-New York cross session, especially when New York opens up. Then Tokyo Open. So as I always say, first 3 hours of each session are usually most profitable ones, because first 3 hours of each session will give you biggest momentum and volatility, and will probably give you best chances to have a successful trade. I definitely think, but you know, there is sometimes a thing with trading, that trading during Fridays can be pretty much dangerous, and trading during Fridays can really be very nasty to our account, because from time to time there are good setups. For example, if you saw the setup which I prepared for you on Friday on GBP, if you traded the setup, you could have made a huge number of pips even on Friday. But generally Friday is not so good for trading, because momentum and volatility usually change direction. Why is that? It's because of profit taking. Profit taking is another I can say gauge for volatility, because profit taking usually reverses trend trades. So trend traders are usually lose when profit taking is taking place, because of that volatility and because of reverse price action. So you probably know that if the trend was to the upside on Friday, usually it will reverse, and vice versa. That is because there is profit taking on Fridays, and usually traders do not want to risk anything over the weekend, and what they do is they close their position. Every close of buy position is automatic sell into the market. So when you make, for example, you're long, and when you close your trade, you effectively made a sell into the market. The platform does not tell you that. You book the profits, but in order to close a buy, you need to make a sell. The platform closes your trade, but it's an automatic sell into the market, okay? And when most people do that, and when majority of traders do that, price will start to reverse. Now imagine when big money starts to take profits, usually you think, okay, the price is falling, this is good entry, but no, it's falling, and usually prices consolidate below your entry point. That is why profit taking days are actually dangerous for traders who prefer to ride a trend. And profit taking days have more impact on intraday trading than on intra-week trading, because intra-week traders or intra-month traders are usually not affected by profit taking. For intraday traders, and we are mostly intraday traders, profit taking is something which we should definitely be aware of, and where we should not definitely take any any chances because profit taking will usually reverse our profitable trades to losing trades, okay? So minor crosses will give us high degree of volatility. Have that in mind when you trade. Volatility also provides trend momentum, and be aware, as I said, of profit-taking days. You can also check other pairs such as Australian dollar CAD, Australian dollar yen, Australian dollar New Zealand yen, New Zealand CAD. And actually, I prefer to stay out of Swissy setups. These last few months is just because margin has increased and has been increased for Swissy trades and for Swissy setups, and definitely I think that today's Swissy trades just do not justify risk to reward ratio and high margin use. So definitely there are other pairs we should also cover, and by other pairs I really think that you should try to trade minor crosses, especially GBP New Zealand, GBP Aussie, and for that Prime account is very good with other markets, because Prime account has really very low spreads with all of those minor crosses. How we basically trade high momentum trading? We basically need just to open 1 hour chart. Then we need to look for Marubozu candlestick. We need to draw Fibonacci in the candle direction. Entry should be around 61.8 or 78.6. Marubozu should have at least 25 pips in itself. Okay, it's 1 hour and it should have at least 25 pips in itself. It usually happens after a breakout of important support or resistance level. Okay, so it's pretty straightforward method, and I use it very occasionally when I see that momentum is going up, so I want to exploit the momentum to both long and short trades, because guys, do not forget, momentum is not the direction. We use momentum for direction. Momentum is just giving the price a good movement. So if it's a long trade, we need to see a Marubozu long candle. If it's a short trade, we need to see a Marubozu short candle, okay? There are some variations which can also be taken account for Marubozu, especially if that breakout happened after a break of important support or resistance level, okay? So that is what we should cover, okay? High momentum breakouts, okay? And that breakout can be seen very precisely on 1 hour chart, okay? 1 hour chart. Now pay attention, guys, to Marubozu candles, okay? These are Marubozu candles. Now, let me tell you one thing. Marubozu candles are always candles, I call them bully candles. There's the same term used for all candles that mark strong buying or strong selling into a support or resistance. By strong buying, I think that those candles are definitely candles which have at least 25 pips, okay, and counted from the top to the bottom. They need to have at least 25 pips in itself. Okay, pay attention to what I'm saying. 25 pips in itself, at least. So that is the lowest number for our potential trade to be effective. Do not forget that. So bullish white Marubozu candles effectively exploits momentum to the upside. Okay, so it is the momentum to the upside. Bearish Marubozu candles will exploit the momentum to the downside. So do not forget the difference between momentum and direction. Okay? Momentum is one thing, direction is another thing. So this is Marubozu black candle. We have also variations for Marubozu black candle. Black candle without any shadows is pure black Marubozu candle. Black closing Marubozu has a little small wick close to resistance. So pay attention. These are all variations which you can use in this trading methods. Okay. So black Marubozu does not have any of the wicks. Closing Marubozu has a wick at the top. Opening Marubozu has a wick at the bottom. So it's the same for bullish candlesticks. It's completely the same. And you can see from this, sorry, this is, okay, let me show you, I showed you other screen. Yeah, this is, okay, this is it. 25 pips, no matter if the candle is white Marubozu or black Marubozu. It's basically the same. It's basically the same. So you are not, you should not be afraid for measuring momentum by these two candlesticks. Okay, it's, as I said at the beginning of the webinar, the method is pretty straightforward. Okay, it's pretty straightforward and it's very, very effective. So you should not be afraid of trying to trade, of course, after you have practiced. Sorry guys, again, my slides are getting all over the chart. I will use, just let me switch my screen. Okay, 1 minute. So this is a good slide. Okay, where we stopped at black candlestick. Okay, here we are. So black Marubozu and white Marubozu are definite choice for high momentum trading. How we actually do high momentum trading? This is Marubozu candle. You look at this, it's pretty straightforward. So you need to see a good breakout of the levels. Okay, this is previous swing. Now pay attention to what I'm saying. You need to watch this, and because that is the best way to learn. This is previous swing, and this was obviously a support. So you can identify a swing point and support by using just two horizontal lines. Okay, this is previous swing, this is previous low. So this is low, this is high. This is, what is this? This is Marubozu candlestick. So we talked about this. So this is Marubozu, which has broken a previous swing high. And it has definitely more than 25 pips in itself. So what you need to do is to wait for the candles to retrace to either 61.8 or 78.6, and then try to exploit a long entry. It is always the best, and it is my suggestion, that first 3 candles after this high momentum candle should give you usually the entries. Now these are variations. You can try to trade after the third candle has made to 61.8 or 78.6, but in recent observations I have used the rule that candles should be ideally 1, 2 or 3 candles, so 3 candles after Marubozu, there should be an ideal entry. That is the second example. So we had an entry at the third candle after Marubozu. Okay, so you should add 78.6 on your Fibonacci if you haven't done it before. But the thing is, if you see how the price behaves, after Marubozu has been confirmed, this was previous swing, okay, look at this, price got into 61.8 and made to the target. Targets are usually 2 Fibonacci levels after the first after the entry. So if this was the entry at 61.8, your first target is this. After the price breaks through this level by 5 pips, you move your stop to 38.2 in this example, hoping that the price will have enough momentum basically to give you a huge number of pips. The final TP for me in this case would be, of course, I would need to look to the left, and probably by looking to the left we would have seen some swing points here. So previous high after the high has been made. Okay? And use also your logic. For example, this setup is pretty much straightforward because this is inverted head and shoulders pattern. So this is inverted head and shoulders. And inverted head and shoulders basically was good to trade with 61.8 in this example. So once more, guys, rules for this kind of trading. Open 1 hour chart. Look for Marubozu candlestick. Draw Fibonacci in the candle direction. Entry should be around 61.8 or 78.6. Marubozu should have at least 25 pips in itself. And it usually happens after a breakout of important support and resistance level. Okay? So this is bullish white Marubozu candle. This is bearish black Marubozu candles. We use these candlesticks to trade high momentum. These are 2 examples of how to trade momentum. And guys, do not forget, these are master candle concepts. So today I'm teaching you how to trade high momentum by using master candles, and you will see how to use master candles on scalping, and you will use this concept also in breakout and counter trend trading, which we will cover next premium webinar. So this is the first part of premium webinar, which is showing you and where I'm teaching you how to trade high momentum and scalping, and by using master candlesticks. And next part of the webinar will be using master candlesticks but with counter trend trading and with breakout trading. And I see that people are kicking in now. Sorry guys for a bit of delay. That was due to time zone difference. I need to say now we have a huge amount of people coming in. Our webinars will start at standard time. So for all of you who joined up now, I need just to tell you that tomorrow webinar, my session recap will be at standard. It's 4 p.m. GMT. It's not 5 p.m. GMT. It's 4 p.m. GMT. So same, it's 6 o'clock my time. So it will be the same time as I have been doing that for the last 2 years. So 4 p.m. GMT. If you see that on the site is 5 p.m. GMT, neglect that and come at 4 p.m. GMT. It's actually 6 GMT plus 2, which is my time zone, okay? Because we had daylight saving shift. We went ahead 1 hour, so now I'm in GMT plus 2 zone, and webinars will start at 4 p.m. GMT. Do not forget that, okay? Let's get back to webinar. So actually, what I was trying to say, the best entry for taking momentum on master candles, because this is definitely a master candle, okay, and it is in itself a support and resistance. This is support, this is resistance. So this candle is holding all other candles in place, but is actually a momentum candle. How to trade momentum by master candle? You just need to pull your Fibonacci from the bottom to the top, from the left to the right, and wait for the price to approach either 61.8 or 78.6. Stops should be definitely placed 5 pips below this master candle, high momentum candle, and you should ideally have your entry at least, or I need to say, I am always preferring next candle to touch 61.8 or 78.6, but it doesn't happen. 3 candles after the master candle should at least touch 61.8 or 78.6. If you have an example like this, this is an example of inverted head and shoulders. You can see the left shoulder, head, and right shoulder. It's also good to try to exploit this, the top of the bottom of the right shoulder. So actually, this is also considered a good entry after high momentum candle. Your stop is 5 pips below master candle, and your first target is 2 Fibonacci levels after your entry. So if you made your entry here, your first target should be there. After the price breaks this target, the 38.2 in this example, by 5 or 10 pips, you need to move your stop loss to this level. There is no strict rule when to put your stop loss to 38.2. I usually want to see how momentum goes, and if I see that candles are really breaking these highs, after it makes 10 pips from this level, I can put stop loss at 38.2 then. And final target price is actually a previous swing after this candle breaks. So that is your final target, which usually will be one of these tops. Same guys goes for this. This is also a good example. This is Marubozu candlestick. As I said, some variations of Marubozu candlestick can be also observed and can be taken in the account. This is by all means strong bullish momentum candle, and it's actually master candle. As you can see, it holds both tops and bottoms. Now, second candle from master candle has given us 61.8 entry. Okay, 61.8 entry. First target was hit. The price came very, very close to second target, but it stopped short around this region and went to pullback. So usually we want to exploit first touches, because usually the first touch is the most important one. Okay, the first touch is usually the most important one, and the first touch will usually give us a initial momentum push in desired direction. So we can actually move now to see a real-time chart. I will show you now a real-time chart, and I will show you how it looks like on the real example. So this is GBP dollar, and you can see, guys, in GBP dollar we have a momentum candle, this is momentum candle. This is perfect Marubozu, I need to say. Now you can see my GBP dollar chart. This is perfect Marubozu. Look, and it actually, what did I say? It needs to break important swing point. This Marubozu has broken to these 2 important swings. Okay, 2 important swings have been broken, and we want to take trades after this candle in short direction. So this is master candle. Learn this master candle concept, because very often in my analysis I will use master candle, and probably in GBP dollar analysis, which I will publish early morning tomorrow, I will use this concept. This is important because master candles are usually candles which give us important support and resistance points. And because I still see people coming in now, I will be very clear. We had, guys, GMT shift. Please, for all webinars from today and tomorrow on, they will be held in standard time. So it's 4 GMT or 6 GMT my time. It will be the same. So this GMT shift will not affect us. Okay. So tomorrow my webinar will start at 6 p.m. my time. It's actually 4 p.m. GMT. So if you see that on the website it stays 5 GMT, please forget that. I told already Admiral Market staff to correct it, so it should be corrected tomorrow. The webinar should start at 4 p.m. GMT, which is actually 6 p.m. my time, and it's actually the same time we have had all these previous webinars until today. So today we are maybe a little bit earlier, but that is the compromise which I made, because some people got in at 4 GMT, and now I can see people coming in now is 5 p.m. GMT. So please take that into consideration. Webinars will remain at the same time. So let's get back to the webinar. This is Marubozu Black. Now, what did I say? Wait to see if this Marubozu had broken through previous swing points. 2 swing points have been broken. So we are good to trade this candle. You need to be patient. Wait for the candle to hit 61.8 or 78.6. Either one of these levels will be good for trading. So 61.8 was hit, 78.6 was hit. No matter where you traded, you should have taken the profits, because price, the first target for 61.8 is 38.2. It was hit. Then first target from 78.6 entry is 50. It was hit. Price goes 5 pips below the level. It wasn't hit. And you can see, if you were patient, then high momentum master candle breakout, master candle concept gave you a lot of profit. So this is the first part of practical naked trading. Today I'm teaching you to trade master candle high momentum trading and master candle scalping. Next month we will have master candle breakout and master candle counter trend trading. So be sure to sign up when you see the banner for practical naked trading. And this is actually one of good concepts which I have studied in the past. So 61.8, 78.6, your entries, and you can see how the price behaved. You need to know, and you need always to remember that you trade this concept on 1 hour time frame, and that the Marubozu should have at least 25 pips in itself to be valid for trading. Okay, let's see another example of a potentially good trade. This is Marubozu, and it's actually good because it broke through previous swing point. Look at this. This was previous swing point. Okay, I will mark it again. So this is previous swing point. It broke through it, but did it give us the entry? We will see. So you draw your Fibonacci from the bottom to the top. From, of course, I always say left to right, but this only one candle is enough for you to see if there was a setup. So the price didn't hit 61.8 or 78.6, so this was a no trade. So this is the concept which you can use no matter what kind of system you use. Okay, this is price action, and price action can always be used in conjunction with other systems which use indicators, right? Let's see, Marubozu candle concept. This is also Marubozu candle concept, and this can be good because actually, look at this. It broke through this previous swing, and let's see. I didn't cherry pick these candles. Now I'm trying to spot some of those. 61.8 was hit. First target was hit. So guys, you can see basically where it went. Straight to first target and a little bit below. Okay. So another good Marubozu breakout candle. This is clear Marubozu breakout. Okay. Because previous swing was broken. Okay. Previous swing was broken. This candle broke previous swing. And actually, you notice that many times, guys, when a candle breaks through previous swing high and low, there is another push of momentum to give you a potentially good trade. And this is exactly what happened. This swing low was broken by Marubozu. Look. But I think that there was no entry here. Okay. Yes, yeah, only 38.2. So our entry would be ideal here at 61.8 or 78.6, and it will be probably a good one. Yeah, look at this now. This candle is pretty much, yeah, this is another observation which I need to tell you. And actually this is indeed a good, a spot on trade, I can say. Previous swing was broken, but now look at this. This is Marubozu. I said that you can put stop loss 5 pips above this level. But actually, guys, when you see a big drop, look, this was a huge drop, really, on GBP dollar at that particular time. I would always suggest to be a little bit, I can say, flexible with your stop, okay? So let's see how it went. The third candle gave the entry, and actually if your stop loss was placed, let's say a bit, I can say a bit higher from this point on, 5 pips from this candle, this could have been a great trade, guys. Look. So always pay that into, pay attention to that. If you have previously witnessed a huge drop, or rise, and you want to trade momentum candles, as the way I'm showing you, after this big drop, we should have at least be a little bit flexible with our stops. So if we put our stop 5 pips above this candle, we would have been stopped out. But eventually, look at the profits. So 61.8, 1, 2, third candle hit 61.8. So actually, I said that the best entry is always the one of first 3 candles after Marubozu candle. So 1, 2, 3, 61.8, 78.6, both were in profits if you put your stop losses up there. And even more if we exploit the momentum with trailing the stop. Okay? This would have been a great potential entry, but this is a good example. In this example, I would definitely be trading this. But the thing is, guys, look, previous swing was broken. Okay, this is previous swing. And now only a good entry to 61.8 or 78.6. That would be good, but no candle has given us such a setup. So first 3 candles, there should be an entry. Or as I showed you also, if you see a pattern such as inverted head and shoulders, this can be pretty much good for you to trade. Okay? Let's see if we had another example. Actually, we have it here. Marubozu candle, which broke through previous swing. And actually, this was a swing which was broken. This was also a swing which was broken. And we can see that this candle has retraced. So actually, if you see this, so it's 1 pip far from entry, it's good. Do not be peculiar. If your entry is 2 pips from, or 3 pips from 61.8, if the trade is going to work, it will work. So actually, you can see 61.8, next level TP was touched, and on good momentum, we could have made even more pips. Okay, and my final target would be here, because that would be a previous, and it would be touched here at this point. Okay, so this is master candle, high momentum candle. Now we can switch to master candle scalping. Okay, let's see how we can scalp with these candlesticks. Okay, so this was actually, as I was showing you, inverted head and shoulders. And you look at the example, when you see this pattern, you can see 1, 2, 3, third candle after Marubozu didn't give us any entry. But subsequent candles gave us entry, especially this candle or this candle? Because the price made inverted head and shoulders. And when you see a pattern as this one, after momentum candle, it could be exploited to give us some nice profits. Okay? Also, one of the examples, this is the example which I really love the most because this is very clear price action. Head and shoulders, previous swings broken, guys, looks. Previous swings were broken. It's very important to notice previous swings. And look at that. Second candle hit 61.8, 78.6, and look where the price went subsequently. Okay? So now candlestick scalping. That method involves heavily babysitting and market watch. Okay? It's called naked scalping because we do not use any indicators. Okay? Aligning time frames by using candlesticks. You should always align your time frames when you want to do naked scalping. I will show you how to do that. Okay? And it's TOTH. TOTH means top of the hour trading. Okay, top of the hour trading. TOTH means top of the hour. So you will align different time frames. How we do that? This is for buy entries. 1 hour, M30, M15, M5. They need to close as bullish candles. Okay? On M5, price needs to go 2 pips above the close plus spread for buy entry. So 1 hour chart, 10-hour candle should close bullish at 11 o'clock. M30 chart, 10:30 candles should be closed bullish at 11 o'clock. 10:45 on M15, on M5 finally. 10:55 candle should be closed bullish at 11. Candles should be obviously bullish or 2 candle bullish pattern, pin bar rejection, hammering alpha inside bar. And what did I say? What did I say? So previous swing should be broken. Previous swing should be broken, okay? This is the example. 1 hour candle, okay? 1 hour candle. M30 candle, bullish candle on 1 hour. M30 bullish candle. M15 bullish candle. M5 bullish candle. Above 2 pips above M5 candle, there should be our entry. There are 2 rules for stop loss placements. Because this is scalping, we should be a little bit aggressive. So 5 pips below this candle is our stop loss, and targets are in between 5 to 15 pips. That is a scalping method, okay? 5 to 15 pips are usual targets. Now obviously if you know how to turn a scalp into a scalp swing, that can be beneficial to you, but most of the times it's 5 to 15 pips of a target. So let's see it on a live chart, okay? This is how it goes. This is 1 hour scalping entry for euro dollar. So I will zoom it in. As you can see, this 1 hour candle broke through previous swing. Previous swing was this one. This was previous swing. And this candle broke with a nice bullish candle through previous swing. Let's switch to M30. Yes, M30 is also a bullish candle. M15. Bullish candle. M5 bullish candle. So 2 pips above this bullish candle, it's our entry, and you can see where the price went. Sometimes if there is a good momentum surge, you can even make more than 15 pips. But do not forget, this is scalping method. Okay? Another example, 1 hour candle. This was previous swing. Obviously, this was previous swing here at this point. Look, previous swing. And this strong 1 hour candle broke through this previous swing. Okay? We go to M30. Look, previous swing was broken and M30 is bullish. So 1 hour candle is bullish. M30 candle is bullish. M15 candle is bullish. M5 candle bullish, and we go with our entry. Okay? We are long. Bang to the upside. So finally, 5-minute candle should be definitely bullish and should confirm all of previous higher time frame bullish candles. Same guys goes for short trades. You need to align higher momentum. 1 hour candle should be bearish. M30 candle should be bearish. Price needs to break through previous swing. So in this example, this was previous swing. This is 1 hour candle which broke through the swing. Well, let's see 1 hour exactly. 1 hour, yeah, no, 1 hour didn't break, but we will see another example. So let's see if there was, yeah, this is a good example. This was previous swing here, and this 1 hour bearish candle broke through this swing. We will mark it. So 1 hour is bearish, M30 is bearish, okay. M15 is bearish, M5 bearish. So 2 pips below this candle we go on the short side. But do not forget, guys, 1 hour candle close should be aligned with M30, M15 and M5 candle closes. Okay? Only then you should make an entry, and only if previous swings have been broken, taken out. Because if previous swing has not been taken out, look at this example. This is actual support. And even if you see a bearish candle here, this was previous swing. It needs to break, guys. Do not forget that. It needs to break. Only then you can consider an entry. Break with a bearish candle, not with a bullish. This is fake out. This is bearish candle. This previous swing was broken. Okay. But let's see it on yes, H1. Look, previous swing, which was exactly at this point, it was broken by this candle. Okay, it was broken by this candle. So you never want to trade until the swing is broken. If you take a short, even on a short candle, you can make it a losing trade because it's actual support. So this candle, we should always take a 1 hour candle close. Okay, 1 hour candle close. So 1 hour M30. Okay, 1 hour. I see audio problems. Do you hear me? Do you hear me speaking? Okay, guys, just tell me, do you hear me speaking? Because I had a message that we had audio problems. Just confirm that it's okay now, that the sound is okay. Type in okay if you can hear me. Okay. So is audio good? Just type in okay if you can hear me. Okay, let's resume then. This was a bearish candle which was broken here, at this point. So this previous low was broken, okay? And when we zoom into lower time frames, we can see actually how candle behaved. M30, M15, M5, and actually that was an entry. So you always need to align, as I say, 1 hour, M30, M15, and M5. Okay? So this was basically what this webinar was meant to cover. Thing is, these are pro tips, guys, for these kind of methods. And do not forget that this is the first part of practical naked trading. The thing is that we will have additional practical naked trading webinar next month, which will cover master candle breakouts and master candle reverse trades or counter trade trend setups. Okay, so we need also to know how to trade counter trade and how to actually make breakouts from master candles. This part of today covered master candle high momentum trading and master candle scalping. Okay, and those are parts of practical naked trading. Pro tips are: you should risk approximately 0.3 to 0.8% per trade. Okay, you should definitely try to trade multiple pairs. Okay, multiple pairs are always best for trade. Trading hours are first 3 hours of each session. Okay, last 5 minutes and first 5 minutes of the 1 hour candle are usually most volatile. First part of profit taking on Friday happens around London noon. Do not forget it. First part of profit taking is usually around London noon. Very often wicks will tell you more than bodies. Okay, that is why I'm saying, and I always tell you to pay attention to previous swing, both high and low, because if previous swing is broken, that is confirmation for us that we can actually take the trade. And always trade with stop loss. Don't ever trade without a stop loss. Okay? Now if you have any questions, you can ask me. If you do not have any question, guys, then we can assume the webinar is over. Sorry again for daytime shift. Some people join up earlier, some people join up later. And another information, webinars will take, of course, will take place at the same time. I will show you now. So these webinars will happen at the same time as they have been always happening. So we will not move the time of the webinar. Under education, when you go to webinars, there will be, maybe it will say 5 p.m. GMT. Do not take that into consideration. It should be changed to 4 GMT. So next webinar will be weekly Forex recap 4 GMT, just to state out if there was any confusion. Okay? So guys, if you don't have any question, I think that everything is clear. We can assume that webinar is over now. I wish you a good rest of the week, and as always, guys, I wish you to trade safe. Okay? So I wish you to trade safe as always. I don't see any question, so we can assume that the webinar is over, and I will see you tomorrow at 4 p.m. GMT, 6 GMT plus 2, okay? Standard webinar time. Thank you, and use this knowledge to your advantage. Cheers and trade safe.